Hi, Matt. It's Dan Barnholden, CEO of Luca Mining. Luca Mining is an operating company with two mines in Mexico. We operate the Tahuehueto mine in northwest Durango. It's primarily a gold and silver mine. And then we operate the Campo Marado mine in Guerrero State, which is about 6.5 hours drive south of Mexico City. That's a VMS style deposit, so we produce copper, gold, silver, zinc, and a little bit of lead at that mine.
Dan, good to see you. You're on the road at the moment, aren't you? So trotting around seeing investors.
Yeah, that's right. I've just finished up a road show here in London, so I'm in your time zone, which makes things easy here. Spent the week meeting new investors, particularly institutional investors. We're at a juncture with the company where we're really trying to bring in some new institutional investors. We've been primarily a retail success story over the course of the last year, and we think that we are now poised to become institutionally viable as an investment opportunity.
And but tell me this, because obviously we'll get into the projects in a second. You've, I guess, spent the initial period of your time there as CEO just tidying up the balance sheet, we'll call it. So when you look back, what are the things that you're proudest of in terms of having achieved, and where's that put the company?
Well, when I joined, we had $1 million in the bank, and we had $18.2 million in debt. Today, we sit with almost $25 million cash in the bank and $7.7 million in debt. So a turnaround of close to $40 million over the course of the last year, as well as having invested heavily in exploration and the completion of construction and the declaration of commercial production at Tawetto. So lots has changed. We've also grown a team. I've hired 3 very credible, competent, well-known mining people into the senior executive of the company. So we now have a complete operating team that's poised to take Luca to the next level. And then, of course, the operations have really started to cash flow. And obviously, we've been helped greatly by the move in the commodity prices, but we've also made many operational improvements that I'm really quite pleased about.
Right. Okay. Let's get into actually the assets, because I kind of want to get to the point of like where's this thing go? You know, how do we kind of drive that kind of growth? Okay, 2 producing assets. I'm going to start with Campo Marado, if I may. There's kind of, if you got to sort of, well, how's drilling there first of all? Because I've seen some numbers recently which look quite impressive.
Yeah, drilling's going great. I mean, we started up for the first time in over a decade last November. We started with some underground drilling, but the really exciting part of the drilling has been over the course of the last 6 or 8 weeks. We've commenced a surface drilling program, and the surface drilling that we're doing is targeting known higher grade gold zones to the north of the current mining area, drilling into a zone called La Reforma. And La Reforma is known to be higher grade gold. And so we announced about 2 weeks ago, we announced our first surface drilling into La Reforma since 2010, so 15 years. And we were very excited at what we found. The first hole intercepted 15.5 meters of 5.5 grams per ton gold, 150 grams per ton silver, and 8.5% zinc. So much higher grade than our current mining zones. And obviously very excited about the gold content in there. And so we're doing a very active drill program into La Reforma. We expect to be able to continue to announce higher grade gold zones, and that will be a game changer for the economics at Campo Marado.
Right. Okay. And El Rey and G9, what are they showing up?
Yeah. So G9 is the current drilling, or sorry, the current mining area that we're in now, and that was really the deposit that built the mine, and that was higher grade zinc. It was almost 10% zinc. And obviously, the mine was built at a time where there was a lot of enthusiasm about zinc. Zinc moved from $1 to $2 over that time. Zinc, of course, has come back to about $1.20. And so in the same time period, gold is up more than 5 times, right? So it just makes sense for us to start to focus more on higher grade gold. And so that's exactly what we're doing. I think that investors will start to see us further delineate the high-grade gold zones at La Reforma and El Rey. and then really focus on improvements of recoveries also of the gold. So that's really what I talk to the internal operating team about is let's see if we can double the gold grades that we're mining and double the recoveries. Right now, we only get about 25 to 30% of the gold. So we're working with Ausenco to look to double those recoveries.
Okay, and I'll come on to the Senko in a second. So, but this drilling is a kind of polymetallic, and as you say, these VMS horizons that you have. How do you go chasing the metal that you want? What do you know about the ground that you've got that kind of informs the drilling, the targeting, and the modeling?
Yeah, so the deposit has actually been very well drilled over the course of the last 30 years or so, from the discovery that was made by the Mexican Geological Society in the late 90s. There was some legal wrangling in the early days, but the project ended up with Hunter Dickinson, who is a Vancouver-based mining venture capital firm, and they built a company called Farallon out of it. Farallon was ultimately sold to Nearstar in 2011 for $410 million. And then Nearstar operated it until the mid-2010s, at which point, Nearstar blew up in spectacular fashion. During that time, there has been an extraordinary amount of geological work done. I would estimate that it would cost in excess of $100 million in today's money to replicate the exploration work that has been done. And so we are the beneficiaries of all that work. There's over 600 kilometers, 600,000 meters of drilling has been done into this project. All kinds of surface sampling, soil samples, gravity surveys, electromagnetic surveys, et cetera, has been completed on our property package. We have all of that data. And so one of the things that we know is that there are higher grade gold zones within the deposit. And obviously with gold at or near all-time highs, it really is to our advantage to chase on that work that has been done over the course of the last 25 years. And so that's kind of what the current drilling is doing, is following up on the known higher grade gold areas. But also stepping out and seeing what else might be on the property.
Right, and obviously as a producer, as a cash generator, you can choose how to allocate your capital, and you choose. I guess you've got a lot more flexibility in terms of what you need to report to the market. So with this new drilling, can you be so clear what you're trying to do with that? Is it just to support mine planning and the metallurgy? Or do you feel a need to put out a resource? Is there any benefit in you in doing that?
Well, now, one of the things that happens when a company is under financial distress is you often don't stay current with your technical reports. And so at Campo Marado, the last real technical report is from 2018. So we've obviously there's been a lot of mining since that time. So we are working on a new mine plan and new technical reports, new resource estimates, et cetera, at Campo Marado. One of the things that we can do is we can use current metals prices, which are obviously much higher than they've been in the past. So we expect our resources, while there has been some depletion, we actually expect some increase in the size of the resources at Campo Marado, particularly, again, into those unmined areas that are higher in gold grades. So short answer, yes, we are, to your point, we are generating cash flow, which means that we do have capital to allocate to growth opportunities. One, of course, is demonstrating to the market the longer term potential of this mine, because we think it's going to just continue to grow. And that's obviously why we're doing the drilling, but also why we're studying the ore body and putting together new mine plans.
Okay, and to do that, can you just sort of explain the process? Because you've come in and sort of patched up and fixed, I'd say probably a better word, a situation which was difficult. I mean, obviously metal prices is really helping as well, but you into operationally you've had to change things up. On the balance sheet, you've had to change things up. I think people have kind of moved away from viewing this as a troubled and difficult mining company, and they're now into, I don't know, whatever you want to call it, Campo Marado 4.0, however people view it. What's the feedback?
Well, the feedback obviously is great. Over the course of the last 12 months, the stock is up 3x, and so people have observed that we had a plan, and we've been able to execute largely on the plan. And some of the things that we've done operational, we brought in a new mining contractor who has been very credible and very competent, and allowed us to get a consistent throughput at the mill. This drilling that we've talked about. So I would say we're sort of in the middle innings of the turnaround. And so really the first year was about riding the ship, both financially and operationally. Then you layer on some exploration, which has been ongoing for the last several months. And now it's really about, okay, this is what we've got the present looked after. I think people are comfortable that we're going to be able to continue to generate cash flow in the short to medium term. And then the question becomes, okay, well, what do you do for me next, right? The investing world is always about what have you done for me lately, and what are you going to do for me next? And so really what's next is kind of what we are putting together as a plan and communicating to the market. And I think that what's next is very compelling, and I think that it paints a picture of growth. And so that's what I've been here marketing in London for the last week about what's next, and really about why an institutional investor might step into this at this time.
Okay, I think one of the things that I'm trying to understand as part of that growth story is, for instance, you've got, well, I think you're drill testing tailings, right? Is that right?
We're not drill testing tailings, but that's one of the opportunities.
Okay.
You wouldn't necessarily drill it. You might just take some bulk samples, and so send a couple of trucks to the lab that has tailings in it. And we are in the process. That's one of the things. Look, we've got a laundry list of things that haven't been done over the course of the last 5 or 10 years at Campo Marado. Owing to commodity prices, COVID, all of these things that interfered with the normal operations of what you would expect a mining company to do. So a lot of those things weren't done. We're now, over the course of the last 12 to 24 months, have put ourselves in a position to do a lot of those things. And so that's very much a lot of what we're doing now is catch up for capital opportunities and capital investment that was foregone over the course of the prior 5 years.
Okay, and just sort of must have wrap up or come back round to the beginning of this conversation around drilling. Can you doing what? How many meters over what period of time, and when does it conclude?
Yeah, so the original budget was for 5,000 meters, and 5,000 meters would be, I think that we had budgeted something in the order of $1.5 million. Okay, that was a surface drilling at Campo Marado. 5,000 meter program. And because of the success that we had with the first drill hole that we released, and the next bunch of drill holes look quite exciting and interesting, I think you can bet that we are going to extend that budget well beyond $1.5 million. We are at our next board meeting, we're going to take forward an increased budget. And this is a market, not just for our company, not just at Luca, but this is a market that is responding very well. And I would say we're in a bull market for precious metals companies. So it's a market that is responding to positive drill results. And so if that's the case, what the market is telling you is keep drilling, drill more, increase your budget, demonstrate that there are high-grade gold zones, demonstrate that the mine life is going to grow, demonstrate that this asset has a longer life than maybe the market originally conceived. And so that's really the point of the drilling. And it's a fun market, as you know, Matt. It's a fun market because companies like ours are doing exciting things, and the market is responding. Share prices are going up as a consequence of good exploration work. And so we're going to continue to pursue that work.
And how does the market value exploration versus, say, some bulk tonnage on the, or bulk sampling initially, but eventually the processing the tailings? And how do you put a value on that so the market can judge how you spend and allocate your capital against all the options on the table?
Yeah, that tailings one is an interesting one, because I think I mentioned earlier to you that that we're only getting 25 to 30% of the gold out of the ore that we're processing. And that's not to get too metallurgically in depth here, because I'm not a metallurgist. I don't believe you are either. So we could get pretty lost in a conversation. But generally, what happens is you suppress pyrite because it interferes with our recovery of zinc and copper. But of course, the gold tends to ride with the pyrite in the metallurgical process, and so pyrite goes to the tails, gold goes to the tails. So over the course of the last 15 to 20 years, while this mine has been in operations, there's been an extraordinary amount of gold has been put into the tails, probably up to 75% of all the gold that has been mined over the course of the last 20 years has ended up in the tails. So we are slowly but surely starting to think about how we might reprocess those tails to pull what could be $1 billion worth of gold out of the tails, and obviously deliver gold to the market.
That'll be exciting. And again, timeline on that work and that decision making?
Yeah, look, part of our problem, we are still a small company, and there are so many opportunities, and that's a big part of the reason why I took this job in the first instance, was because I did see that there are so many things that that we can do to create shareholder value. You know, not just the gold in the primary deposits, but the gold in the tailings. So, you know, I think that this is going to be really a 2026 kind of an opportunity that we start to investigate. But it would happen at the same time, because it would be the same process to optimize primary mining gold recovery. It would be the same process to include some of the tailings. And so you may have a scenario where you blend tailings in with primary ore, you run the whole thing through a new and improved mill, and you bring some of the gold out of the tailings as well as some of the higher grade gold from some of the new zones that we intend to be mining in. Hopefully by 2027.
Okay, makes sense. And so just let's kind of maybe skip to kind of operationally, still staying with Campo Marado if we can. In terms of the throughput, you know, are we running at nameplate? And if you are, you know, I guess you obviously talked a lot about the kind of metallurgical recoveries, etc. How does it all kind of fit in together?
Yeah. So when I joined, the mill is built for 2,400 tons a day. Okay, so it's a decent sized mill for an underground mine. When I joined, we were struggling to send 1,300 or 1,400 tons a day to the mill. So maybe 60% capacity utilization at best. In the second half of 2024, we brought in a mining contractor. Their mandate was to get to 2,000 tons a day by the end of 2024, which they did. In January of 2025, we reached that milestone. And then we're consistently humming along at about 2,100 tons a day on average, which is probably close to full capacity utilization if you think about scheduled downtime, maintenance, etc. We might be able to continue to push that up a little bit. I don't think you're ever going to get 100% capacity utilization for obvious reasons. But, you know, if we can get 2,200 tons a day to a mill that's built for processing 2,400 tons a day, we'll be pretty happy with that.
Right. And are you looking to, obviously, talk about increased gold or potential of increased gold? Will you be putting another circuit on there? And if so, to do so, will that be self-funded, or will we need to raise capital for that?
So the work that needs to be done, and this we're working with Osiko and their team of top-tier metallurgists, actually led by a fellow out of London here. And really what it's likely going to look like is a finer grind, obviously to release the gold from its encapsulation through a refractory ore body, and so a finer grind than we're currently doing, and so some grinding on the front end, grinding capacity will be needed to be added, and then on the back end it's probably the use of more cyanide, and cyanide obviously is globally used. It's the primary tool for extracting gold from ore. And right now we use a little bit of cyanide in our processes. We'll probably need to use more. And so there's some front end work on the existing mill, and some back end work to add a pyrite circuit, which will include cyanidation. And those are probably the two improvements to the existing mill. To be clear, it's not a new mill. It's an existing mill that will have some upgrades and some improvements done. You're probably talking about tens of millions of dollars, not hundreds of millions of dollars. We will also need to invest in drifts over to the higher grade gold zones, and so that'll be also tens of millions of dollars. Haven't really gotten to answer the question because we don't know what the size of the capital investment is. Haven't gotten to the question of how we finance it. I can tell you that over the course of the last several weeks and months, we have been approached by many capital providers on the debt side. So we would certainly look at debt funding. Obviously, as a big shareholder myself, I'm very keen to minimize dilution. Don't want to be known as a serial equity issuer. And we're generating cash flow, right? I walked you through some of the changes in the cash flow position of the company. We expect to continue to grow our cash balance. Obviously, we would deploy that cash in longer term value enhancing opportunities, which obviously would include these improvements to the mill. So that's, the short answer is we're not quite sure yet what the CapEx looks like. The longer answer is we have lots of sources of capital, including cash flow, debt. The equity market obviously is wide open, but I think that would be down the list of sources of capital, because as a significant owner, I want to increase the value per share. I don't care so much about the market cap of the company. I care more about the share price.
Right. Okay. So it's along with the kind of potential of implementing sort of cyanide leaching. Is there potential for kind of doré production on site?
It's something we will look at.
Okay.
Yeah, entirely possible.
Okay.
All of these engineering studies are about trade-offs and optimizations, right? That would cost substantially more to go in that direction, but it might yield us a higher IRR on the project because now you're selling a product direct to refiners rather than needing to sell it to an off-taker. And so there's obviously lots of, you weigh the risks, you weigh the capital, you weigh the changes in revenue and changes in margin. And so we'll be spending the next 6 to 9 months really focused on the opportunity and the trade-offs, and ultimately we'll come to the market with something that is well thought out and that optimizes for risk versus reward.
Okay, so we'll wait for that kind of Sanko study that you guys are working on, and that'll kind of come back. That will include the tailings component as well as the kind of the.
No, I don't think it.
Chasing the gold. No,
I don't think it will include the tailings component.
Okay.
But it will be focused on the primary mining opportunity at La Reforma. So a number of technical studies being worked on at the same time. One is just a new mine plan that we're working on and hope to have something to the market probably later in Q3 or early Q4. The next piece will be that call it a pre-feasibility study that focuses on the new gold zones to the north. That'll be something that probably comes in Q1. And then it's going to be that test work on the tails. So that's going to be very much a 2026 project. And again, a big part of it is that we're still a small company and we have to prioritize these reports and these opportunities. But what I love about where we're at right now is that, as you can hear, we've got an extraordinary number of different discrete opportunities that we can examine to really start to think about how we create shareholder value deep into the future.
Okay, and so that you'll be coming back with in terms of maybe change to mine sequencing, cut-offs, life of mine, all of that kind of good stuff. at that point. Brilliant. Okay. And so we got to tip our hat towards Tawetto. Obviously, with the 1,000-ton per day operation, how are things going on the ground?
Yeah, so at the end of Q1, we finally, after it was an arduous journey, I'll tell you, but we finally got into commercial production, which means that we were consistently delivering 1,000 tons per day to the mill. We have about 82% capacity, which I feel strongly that we can move that up. So on average, we're doing, call it 25 to 27,000 tons a month, which is commercial production for us. And at that rate, it'll produce between 30 and 35,000 ounces of gold. So we're on that run right now. We've got a great mine manager there, and he is looking at any and all opportunities to optimize and improve production rates there, processing rates. Right now, the bottleneck is very much at the mine. We have just actually, like we did at Campo Marado last year, we brought in a new, better capitalized mining contractor who has newer equipment, more qualified miners. So I do expect that operation to continue to ramp up, which I'm quite excited about. And then again, like we've done at Campo Marado, drilling from surface, first time since 2012. And so we expect to start over the course of the next month or so to release drill results from surface at Campo Marado. And again, the game plan there is to demonstrate that there's a longer mine life available. And so it's really a similar game plan at both mines. It's take these underperforming assets that have been starved for capital for the past number of years, in both cases, up to a decade of limited availability of capital. And of course, that goes back to where we are in the broader mining market. It's been a bear market for the better part of 14 years. You think about really the last time we had this kind of enthusiasm for mining stocks was probably 2011. And my time here in London, it's been refreshing because for the first time in a decade and a half, you have very excited investors looking for new ideas like Luca. And so I had a great week of meetings here. But how that ties back to Tawetto and to Luca more broadly is for the first time you have investors looking for things like this. And so capital constraints are largely not there. And so it allows us to go back and make up for a lot of lost time at both mines, optimizing the operations, exploring, and the exploration potential at Tawetto is really quite extraordinary. There's a little company, well, not so little anymore, called Mithril that has they've made a discovery, and I believe we're the closest operating mine to where their discovery has been made. And I'm not suggesting, it's very mountainous terrain. You probably couldn't truck from there to our mine. But the point is that this region is ripe for exploration and very, very high potential ground. And so the surface exploration that we're starting to do at Tawetto, I'm really excited about.
And well, talking about that, they were talking to that. How's the Santiago breccia target, and how's it compare in terms of grade and size to the kind of current mined resource?
Well, that Santiago, which is where the Santiago vein is where the current drilling is targeting. And as you know, where we're mining is kind of on the left-hand side, or I believe it's the west side of the mountain. And so we're drifting into the mountain, into the Creston and Perdido side of the veins. It has all appearances that the Santiago vein is the right-hand or east side of the mountain. And we have a belief that they're actually the same vein and that it just extends right through the mountain. And so we are drilling back into the undrilled area between the two veins. And the hope is that we can connect them. They look identical. The host rock, the veining, all have all the same characteristics. And ultimately, the hope is that we can connect. And it's about 600 or 700 meters through. And if we can find 700 meters of veining through the mountain, then you start to think about ideas of maybe running an exploration drift right through, And that's how you potentially find a multi-million ounce deposit at Tawetto.
Well, it kind of goes to, I guess, the next thought in my head, which was around, are you working on trying to find a new discovery, which always gets a nice reaction in the marketplace, or resource conversion? It's maybe both at the same time, accidentally.
Well, no, it wouldn't be an accident. That's definitely what we're trying to do. Obviously, we've got underground drilling, and really that's the purpose of that is to add new near mine material to a mine plan that can come in over the course of the next year or two in the areas that we're already mining, where we have underground development. The purpose of the surface drilling is to demonstrate that this mine doesn't just have 6 or 7 years left. In fact, it's got vast potential to be, to grow from 30 to 35,000 ounces is a small mine, and so can we grow the current operation to be 50, 60, 70, 80, or potentially even support a whole new milling infrastructure at a different location. And so that's one of the things that we're very hopeful. If we can find a multi-million ounce deposit, it would actually change the whole complexion of the operation at that location.
Yeah, because like I say, I guess the remote nature of this existing plant, that probably or possibly has creates difficulties around mine development and I guess getting even equipment there or extending this, because so you'd think potential for relocating or building a new plant, that's a possibility if you get this right.
And you've seen pictures, Matt. If you went there, you'd be very impressed that they were able to build a milling operation there at all. It's right into the side of a mountain. There's not a lot of room, and so growing the existing mill there would be very difficult. Right now, it's as we discussed, 1,000 tons per day. Potentially, you could grow it to maybe 1,200 at the outside, maybe 1,500, but you're never going to have a really big mining operation and milling operation there. And so if we are so fortunate with our exploration work to tag into bigger veins, wider veins, more face, the potential for more faces, etc., and you start to think about, could we deliver 2,500 tons a day, that would need to go along with new milling infrastructure, and that would probably need to be at a new location where there's some flatter ground, more room for tails, etc. And so that would be a very high quality problem to have. Obviously, if our biggest problem is how do we take a small mine, and because we've been so successful with exploration, how do we make it into a big mine? That's a problem I'll take all day long, but it would require some creative engineering.
Yeah. Okay. In the meantime, circuit optimization and maybe a small amount of increased throughput. We'll come back to that when you know whether that's a problem you need to solve or not. You said something earlier which kind of stuck with me, and when I'm looking at your share price, looking at the market cap, 400 million, your share register and profile is changing and evolving, and you're going to you're in a lucky position to be able to do that. And again, nice problem to have. How do you talk to institutions, because they're seeing the share price move attractive, the market cap growth, that's attractive, but you got to start putting money on the bottom line. You got to start driving those margins and all of those other things that they look for in terms of this expansion. Where's it coming from? How are you going to do it?
Well, obviously, Q1 was a new high watermark for us. We generated $11.7 million in free cash flow. For context, we had estimated or forecast $30 to $40 million in free cash flow for the year. So 11.7 puts us well on our way to hitting our goal of 30 to 40, and that's money in the bank, right? Obviously, some of that is getting spent on growing exploration budgets, etc. But really demonstrating an ability to generate free cash flow, I think, is something that institutions look for. Right now, we've only got about 6% of our shares held in institutional hands, and so part of my mandate now is to grow that. Institutions tend to be stickier money. They tend to be able to put larger investments into single companies. So, I'm looking for a small number of institutional investors that might want to invest $5 or more million in our company and buying in the market. I think I mentioned to you before that we were recently included in the COPX, which is a copper index. Interesting, because we only generate about 25% of our revenue from copper, but I think that they're obviously always looking for new names. And that 9 million shares of incremental buying had a very positive impact on our share price. So we know that if we can attract institutional sized orders to our company, the share price will continue to go up. And so that's something that I'm very much focused on, growing that number from 6% to, the near term target is 20%. Longer term, I'd like to be about 50-50 institutional and retail. I know that that's not going to happen in one day. And of course, it's difficult because we could easily bring in institutional investors if we wanted to do an offering. We've been noticed by all of the investment banks. We've had 5 institutional research analysts come to site in April. We've got another 4 coming in August. So, the sell side has noticed Luca. We're just waiting to get those institutional investors. And again, if I were inclined to do an offering, all of those institutional investors would easily show up. What I'm trying to do is get them to buy in the market.
Right. So obviously the free cash flow and the EBITDA is attractive. You've also been reducing the debt. I mean, where are we at with that?
Yeah, so we're I believe it's 7.7. We'll make another payment this week, which we do at the end of every month. Sorry, next week. Today's Friday. So next week we'll make another we'll make another payment. We're paying it down at a rate of about $700,000 a month. At that rate, we will be debt free in early 2026. Obviously, with our cash balance, we could pay that off immediately, and we may yet do that. So there's lots of potential uses of our capital, and we're fortunate that we are generating cash. So we have lots of options of what to do with the money.
Yeah, obviously, and low dilution, and I guess funding growth is what they want to see as well. So great update, Dan. Appreciate you making the time. I know you're busy walking the streets of London. Stay in touch. Let us know how you're getting on, and I look forward to hearing from you soon.
You bet. I expect to catch up with you at Beaver Creek, which is where we first met in September of 2024. So a lot will have changed in the year since we first met.